Today, I'm going to share with you guys how to trade volume profile using order flow. And no, I'm not talking about footprint charts. Now, each day I drop analysis videos before the stock market opens and when the market closes, and I give out key volume profile levels for everybody to pay very close attention to. And you always hear me talking about a volume profile rotation trade on the way up and on the way down. And today we're going to go ahead and dissect that. Now I'm going to go ahead and clean this chart up here just a bit. And we're going to be dealing with these three lines right here. And more importantly, we're really going to be dealing with value area high, which is the upper white line. We have the point of control, which is this yellow line right here. And then we have value area low. Now just note the point of control is the price point on the chart that's had the most amount of volume traded at that price for that specific time period. So in this case, this profile right here represents the overnight volume profile levels. And this is the levels I give out each day before the market opens. So now I'm going to drop a white line right across value area high. Then I'm going to go ahead and drop a white line right across value area low. Now let me just show you guys the rule behind volume profile real quick. And it's very simple. If we're below value area low, we come back above it. We expect the market to rotate back up either towards some of these high volume nodes, the point of control, or all the way up towards the other value area. In this case, it would be value area high. When we peak above value area high and we start coming back down, then we expect the rotation to occur to the downside. And a lot of you guys have asked me, Mike, well, where do I get in at? How do I know exactly where to get in at? And where do I place my stop loss? You're in luck because we're going to cover that in depth in today's video. I'm going to share with you guys some excellent trading opportunities with amazing reward to risk ratios. Now, I also want to make something very clear real quick. I am not cherry picking the examples we're about to share. We're going to be reviewing the charts from July 19th, and you'll see this video is going to be posted on July 20th. Now, if we come over here, we've already marked off the value area high and value area low. Now, if we look, I want you guys to pay close attention. We're going to look at a footprint chart for a minute. Then I'm going to show you a much simpler way. Here was value area high. And this is going to be an area where you're seeing we've been above it. Then we came back down. Now, with this, we also had what is called a gap within where the point of control is and where the candle body is, which I've talked about past. And that is a signal to let me know that this is indeed going to be bearish. But if we look to enter, the entry on this would be at the close of that candle once we break that low. And if you put your stop loss all the way above the candle, you're going to be risking 3 points on this specific trade. Now you might say, Mike, that's not bad if we can get a good reward to risk ratio on the way down, because as we look, the market did go substantially lower. But what if I told you we can get in at a much better price with even less risk? Well, I want you guys to pay attention to this candle right here. This is the candle that wicks above value area high and then came back down. This is the same time period that I just showed you guys on that footprint chart. Now we're going to use Bookmap to look at the markets with a whole nother view that most of you guys haven't seen before. Now, all these lines up above us represent liquidity in the market, meaning passive orders, traders wanting to participate in the market with limit sell orders up here and limit buy orders down below us. We're actually going to turn those off for this example. And instead, I want to focus on the bubbles. And I want you guys to think about the bubbles as showing us aggression in the markets. The bigger the bubble is, the more aggression we have in the market, meaning the more orders that were hit on the bid or on the ask. If it's a green bubble, more traders were hitting buy market, buy market, buy market. And when the bubble is redder, more traders were hitting sell market, sell market, sell market. So this white line right here is going to represent value area high that I showed you guys on the 5-minute chart and on the 30-minute chart. What do? We wicked above it. We started to come back down. Now, when you see a straight line of bubbles like this, and then we start crossing right below the first one, and I'm actually going to go below this red one. Look, we can actually look to enter the market right down here. We'll actually give it a little bit lower at 63.75. Our stop loss would only be at 64.75 or higher. That is only 1 point. If you want to go a little bit more, you can risk 2 points. And you can see we get a fast move on the way down, anywhere from 63 3/4 all the way down here to 57.25. So that is over a 10-point move. I think it's 10.5-point move on the way down. But keep in mind, if we're looking to use Bookmap to enter the market on that trade, what I would do is peel some off with a target number 1. Then I would simply try to play the rotation all the way down for the runner target, because once we get target 1 off, we can either do a 2-to-1 reward to risk ratio on target number 1, move the stop loss to break even, and then we try to play this whole swing on the way down. if you look, if we were able to capture the entire swing down, that is 115 points of movement for the NASDAQ. That is over $2,000 for one single contract, if indeed you were able to catch the whole move. And you might say, Mike, you're just giving me a one-off event. Well, what about here where we dipped below value area low and then we started to come right back up? Well, if we come back over here and look at the 5-minute chart, where did that occur at? That would be right here on this candle here. Was there a way to enter the market right here on this candle? Let's go ahead and look at the time period. That's around the 10-15 candle, anywhere from 10-10 to 10-15. Now, as we go look at this second example, I want to let you guys know I'm not new to using Bookmap. I've had Bookmap since November 6, 2020, and yes, I pay for my own copy of Bookmap. Now, we look at the next example. Here's value area low. You can see we break back above it, but I don't see any area to get in just yet. We continue to fast forward, and what do we see? A series of red candles. Now, in this example, this is what I really like to see. I like it when I see a larger candle, then we go a little bit lower and we get a smaller candle. From this point right here, I can look to enter at the top of that candle, and we're going to go ahead and bump that up to about 19,865. Our stop loss could basically be 2 points down here at 18,063, and that would put us right below here. And if you actually look from 65, the market goes all the way up to 77. That is a 12-point move. Then your stop loss could be at break even. Now, unfortunately, your stop loss, your second target would have been stopped out for break even, but still, there are going to be times where you get the entire move. And like I said, in this video, we're going to go through each opportunity, and I'm not going to sugarcoat anything. I'm going to give you the good, the bad, and the ugly with trading volume profile along with Bookmap. Now, if you're not yet subscribed to the channel, hit the subscribe button down below and give the video a big thumbs up. And if you guys would like to check out Bookmap and you'd like to support the channel, you can save 20% off by using the link in the description box down below. So let's look at another example that doesn't necessarily go as planned. And that's going to be right here where we start coming back up through value area low. We're hoping we're going to get the full rotation on the way up, but you can see we just basically go above it. Boom, we fail and come back down. And what that looks like on the 5-minute chart is going to be this area right here where we spike above it. Boom, we start coming back down. So now as we come over and look at Bookmap, this white line right here is essentially value area low. And look, we got quite a big bubble showing up right at that level. If we go ahead and we bring in the orders, notice we had a large resting order right there. We ate through that order and we started breaking that bubble. We knew the market was going to continue up. However, I don't want to simply get in right there. Instead, I'd prefer to wait for a pullback. And what do we get? This nice little bubble right below value area low. So then as soon as we start coming back up above it, we're going to say 19,847.50 with a stop loss at 19,845. And we're going to say we give this roughly a 3-point stop loss, which will put us below the low. And if you look, the market goes up substantially, but then look, we ultimately come back down. Now, if you look at this, even from the price point of 47.50, how high did the market make it? All the way up here to 875. So if you look at this little move is essentially a 30-point move in the S&P 500. Now, when we bring on the orders, why do you think we stop? Look at that large order that we had sitting right here. We basically go into it, boom, we reject right back down. And during the live streams at night, you guys see me using Bookmap to identify the levels where the big players or where there's large orders resting, because one, that acts as a magnet. Then once we get there, we get a chance to see, is that order absorbed and we start to come back down? Or is it like right over here where they just blast right through it? We get a lot of insight by looking at Bookmap that you can't see from looking at a basic candlestick chart. Now, back in the day when I had a full-time job and I started trading the volume profile rotation, one of the ways I would trade this is essentially have a buy stop sitting right above value area low, but then my stop loss would be either below the candle that broke below value area low or the candle before that. In that situation, I'd be risking anywhere from 23 points down to about 33, 34 points for that potential trade that ultimately wouldn't have worked out, because you can see we never made it all the way up towards a point of control. And that's one thing that Bookmap is very good about. We can see the absorption, and you might ask yourself, Mike, why are the smaller bubbles so key? That's showing me as price is pushing down that essentially the sellers are basically evaporating. And then when we come right back up above the bubble, which I know earlier I was calling them candles, then I know that we're starting to get a rejection and it makes sense for me to go ahead and take a shot. But I want you guys to remember, regardless if you are trading with footprint charts or with Bookmap, everything starts with context. What is the market trying to do in the bigger picture? If you can align yourself with the bigger picture, like I'm doing in this example using volume profile, it'll help give you an edge in the market and try to ensure that you're on the right side of the trade. Now, if you guys like me to make a video showing you guys examples of me taking some of these trades that I shared with you guys today, let me know in the comment section down below. Now, if you'd like to learn more about Bookmap, watch this video right here.